We're visualizing equity bubbles. The single best chart was prepared by Goldman Sachs Global Investment Research. What we did here was highlight 3 of the 10 sectors in the S&P 500 in terms of their industry weightings. Among them, energy at the bottom, tech in the middle, and financials at the top. At one point or another, over the past 40 years, each of these was the biggest sector based on weightings. Energy in the late 70s, their market cap within the S&P 500 peaked at 26%. In the late 90s, you had technology stocks. Their group weighting peaked at 32%. And financials, of course, just before the 2008 financial crisis, their group weighting peaked at 22%. It's interesting just to see the changes over time, both reflecting industry fundamentals and the shifting composition of the S&P.
Is the biggest variance there, Tobias, the financial stocks? Is that, of all the different sectors that you look at in your sector guy, is the financials what moves year to year?
Not as much. I mean, tech is up to, I think, about 17–18% now.
Where should it be? Is there a should?
It's fine as long as you got to look at the earnings contributions as well, so that you can kind of think about the valuation criteria. If you want to think about valuations and bubbles, you start getting to things like 5 times book value, 30, 40 times earnings. I mean, if you look back historically, it's not necessarily about the sector; it's about the valuation, and that's where some of these, social media names, cloud computing names, and biotech stocks got to.